Prime Minister of Australia, Malcolm Turnbull, Leader of the Opposition, Mr. Bill Shorten, Chairman of the VRC, distinguished guests, members of the VRC, ladies and gentlemen, boys and girls. Bit of a different intro today, guys. Michael Beresford here from Open Court for today's Property WOD. I hear everyone on the races always giving these elaborate introductions, and I thought I'm going to do that on this week's WOD. Something different. Anyway, what's not different is we're here to talk about what's happening in the media. And there was an article here from Your Investment Property magazine quoting a lot of Louis Christopher, who is the head of SQM Research. Really good website, guys, if you like your data around all things vacancy rate, demographics, stock, etc, etc. And the article is titled "Vacancy Rates Fall in All But One Capital City." At Open Court, we talk a lot about supply and demand. I'm sure there are a lot of you out there chuckling at just the thought of us saying supply and demand. We talk about it that much. But it's a really relevant point, because in the media we hear a lot about the oversupply of property and the amount of development going on and the amount of record construction we've got at the moment. And the impression that's easy to believe, my mum included, because she asked me about it last weekend, is there a saturation of property? Well, clearly, if vacancy rates are coming down, that's not the case, because one of the things that the media tend to leave alone a little bit is population growth. Because if they mention it, everyone hates the fact that we're getting bigger and growing, and at the end of the day, it's really just a big number, and there's nothing sexy in a big number. So, I thought it was a really good thing to touch on. The figures from SQM, I'm reading from the article here, the figures from SQM Research show Australia's national vacancy rate fell by 0.2% to 2.3% over February, etc, etc, etc. Now, why that's relevant, guys, is at 2.3%, this is nationally, right? All property in Australia, mining towns included, we're at 2.3%. Now, historically, a 3% vacancy rate is what's considered to be a balanced supply and demand. Okay, so make no mistake, despite what you hear and what you may believe and what you may see, due to the rapid population growth that we've had in Australia, the vacancy rate is well under that balanced figure. So as we would say, we are undersupplied in terms of available property. If we look at some specifics in here, Melbourne saw the biggest fall in vacancies with its rate down from 2.5% to 2%. Brisbane, Canberra, Sydney and Darwin all saw modest drops of 0.2%, Adelaide and Perth at 0.1%. So the point being, across the board, it's not one city that's skewed affecting all of the others, it's across the board we're seeing a drop, okay? And what's important to understand is that, in that national figure, as I said before, regional and mining towns are included in that vacancy rate. So given that a lot of those towns have been deserted as mining projects have reduced in terms of investment and workforce, as the mining boom has been scaled back, obviously there have been dramatic increases in vacancy rate in those locations. So as far as capital cities go, which is what we'd like to focus on, pretty stable, minimal vacancy risk if you're in the right kind of properties, which is good to know. That's all pretty basic, okay? You could read that in any property book. I guess what I want to relate it to today more so is how rental cycles work, okay? So you're not always going to have a super low vacancy rate, because what will generally happen then is developers see opportunity and they bring stock to market. So just like those of you that have read Cam's book, My 4-Year-Old The Property Investor, will recognise the developer activity chain, okay? Without going into intricate detail in this WOD about it, basically what we're saying is this curve here is demand, this curve here is supply. As demand increases through population growth and natural demand increases, it absorbs some of the available land supply. We get to a point of equilibrium, demand continues to grow, and this, when supply is really scarce, we get to that point in the market that we all hear about, euphoria, and the boom is happening. During this period, however, developers are seeing opportunities based on demand, they acquire sites. It takes them 2 to 3 years to bring their projects to market. And so what we see here is a big increase in supply as all of these developments materialise and those properties become available on the market. Okay, so that's effectively, and this is obviously where, you know, the no-go zone in terms of when we don't want to be buying in that particular location. So quick recap there for those of you that have seen it, or you know, grab a copy of Cam's book if you haven't. Just as capital growth cycles over time, there'll be periods of growth, there'll be periods of stagnation, and there'll be correction phases. Rental is no different. Okay, a great case in point, one of my properties in Perth. Okay, between 2009 and 2012, I saw very minimal. It was $20 per week increase in rent. That was it, over 3 years. So $10 a week each of 2 years and nothing in another year. Okay. Now, the reason for that was that there was simply more available supply. What happened in 2012 though was my rent was up 22%. Nearly $100 a week, the rent increased in a 12-month period. After 6 months and after 12 months. So you're probably thinking out there, oh, your tenants moved out, etc., etc. No, they didn't. They stayed there, and it actually allowed me to secure the next rental increase because they knew that there was such a scarcity of available rental properties, and that sounds like hard work and effort. You know, that's not what tenants want. And then only to have to move out after that. So a good mate of mine actually that lives in Perth was looking for a rental with his then girlfriend, now wife. They were talking about anecdotal stories where they'd get to an inspection 2 or 3 minutes after it opened and 15 parties had already been through. Okay. Now, since 2013, I've had more moderate rental increases. Okay, so just as capital growth cycles, so does rental in terms of when we see moderate growth, when we see rapid growth, and when we see periods of plateau. Okay, so a couple of takeaway points, guys. I've shared a bit of detail. Number one, rent cycle. When the opportunity to increase your rent is there, while the increase might sound significant, it's based again on supply and demand. The vacancy rate in Perth during 2012 was less than 1%. Okay, not very many properties for a lot of people. Take advantage of it, put your rents up. It's a business that we're running here, cash flow is important. Okay. The second thing is, remember that population growth is at a level where there is more than enough demand for the available supply that we have, regardless of how quickly that additional supply might seem to be coming on. That's what the large population growth figures are doing, reducing that vacancy rate, absorbing the available supply in the market. So, quick 101 on vacancy rates, recap on supply and demand. Hope you enjoyed it. We'll see you next time.